Good afternoon and welcome to the Frontier Energy Investor webinar. All attendees are in a listen-only mode. If you would like to ask a question to the company, please enter it into the Q&A panel within Zoom. I'll now hand over to Frontier Energy Chief Executive Officer, Adam Kiley. Thank you, Adam.
Thanks very much, Nathan, and thanks everyone for joining on the call today. Just a reminder for everyone again, so Frontier Energy is obviously a ASX-listed company, and we're developing the Waroona Renewable Energy Project, which is located about an hour south of Perth in Western Australia. The stage one project that we're working through in financing at the moment will be a 120 megawatt solar facility with an 81.5 megawatt 6-hour battery attached to it as well. That project produces some outstanding economics on the way through. So $65 million of revenue with $57 million average EBITDA per annum. A really strong IRR of plus 15% on an all equity basis, which increases much further, plus 20% when you take leverage into account as well, with a free cash flow yield on the project of around 18% with a 6-year payback as well. For that stage one project, we are essentially completely ready to go. So we have the connection completely in place. That's called an ETAC. We have the land that we own at the project. We have all permits, approvals, environmentals. Everything for that stage one project now is ready to go as we work through and finalize financing at the moment. Importantly, however, and I can step through this in a bit more detail later on, you really got to have a strong thematic behind you as well. And that's what we have with energy in Western Australia at the moment, but obviously across Australia as well. So energy prices, I think everyone's aware, everyone receives a power bill every 2 months. They continue to go up. And we're seeing that more so in Western Australia. And I think with the oncoming supply gap, which is going to be, which is starting to come through with the impending closure of the coal operations, I dare say that the price is going to increase further, and the requirement for projects such as ours is going to become more imperative on the way through. The big announcement for the company just over a month ago was securing that reserve capacity for 5 years locked in. Reserve capacity is unique only in Western Australia. It is a fundamental part of the market and has been in place for the last 20 years and it will continue on long into the future as well. But by securing that reserve capacity, it essentially has guaranteed the company $32 million per annum or $160 million over the first 5 years of operations without selling a megawatt of energy onto the grid. What reserve capacity does, it's an obligation to be there to meet the market during those demand periods to sell energy, but all energy sales are on top of that as well. By securing that reserve capacity, that was important, obviously, from a revenue point of view, but more importantly, from a debt financing point of view. Before you do debt financing of any process, you need to ensure you have guaranteed revenue locked away. By getting that reserve capacity locked in for 5 years, that now is ensured that we have that guaranteed revenue. And it's now seen the company kick off its debt financing strategy, where we expect to be receiving credit approved debt terms, hopefully towards the back end of Q1, but more likely early Q2 of next year. So at the moment, we're just finalising at the moment, and it's a key reason for the raise today. So we're raising $10 million. That will be done at a 25 cent per share price. And we'll also see the company provide a 1-for-2 option as part of it as well at a 40 cent strike price. The reason for the raising is to get the company to that final financing position where we'll have credit approved debt terms as well as finalise the rest of the financing strategy at the same time as well. So there's a lot of work which has been going on behind the scenes, but where the company really is now focused completely as we move forward is to finalise that financing strategy, both from a debt financing perspective, as well as making sure that we really squeeze that equity gap as best as we possibly can on the way through as well. From there, Nath, I'm happy to have some questions and go through the project and the financing in a lot more detail.
Thanks, Adam. Just a reminder, if you would like to ask a question to the company, please enter it into the Q&A panel within Zoom. We've just had a series of questions come through, so we'll just work through these. So first one, how are financing avenues outside of equity for the project progressing?
Yeah. So first off, obviously the debt financing, that's going to be the cornerstone of the way this project will be funded. We are forecasting to receive between 65% to 70% leverage on the project. That will be around 220 or 210 to $220 million of senior debt. That's in line with what we were offered obviously last year as well. So our expectations remain the same for that this year. The interest rate terms that we expect on that senior facility will be between about 2 to 3% plus BBSY. So you're looking at an all-in rate of around 6% in total, which is obviously extremely attractive on the way through. So that's going to be the mainstay of the funding strategy, but we do have obviously then other strategies to really continue to shrink that equity gap on the way through. We have already been offered mezzanine finance by a number of parties. That could be used on top of the debt financing to effectively replace some of the equity. Facilities that are being offered at the moment have been quite attractive on the way through, so we're assessing them. Obviously, we've continued to work through the strategic equity process throughout the course of this year. That's looking at both project level as well as potential parties coming through at cornerstones in the company at the same time as well. So we continue to work through those measures at the moment, and we'll look to finalise those solutions throughout the first quarter or early second quarter of the new year.
Okay, thank you. You touched on this briefly, but how is WA's energy market currently performing, and what does this mean for the Waroona project?
Yeah, listen, Nath, as mentioned already at the outset, energy continues to be on the front page of the paper across the country every day as the country continues to move through the transition. As we look to close off coal and we move towards a renewable energy future. But it needs to be remembered, especially we're obviously a West Australian company, we're focused just on Western Australia. So whilst coal is coming off, coal has still not effectively come off in Western Australia. Despite this, we've already seen energy prices more than double over the last 3 years. So we're currently sitting at around $95 per megawatt is the average energy price throughout the course of this year. That's increased compared to last year, even when it was at $80 per megawatt. The big movement in Western Australia has been the addition of a lot of standalone batteries. So over the last 12 months or just over, there's been 1.4 gigawatts of standalone batteries added to the grid in WA. If those batteries are to recycle every day, that's around 2 terawatts of energy generation that would need to be added. Now, the thing with batteries, standalone batteries, it sometimes gets forgotten about. Before a battery can discharge, it needs to charge. So it's actually the largest now consumer of energy on the grid are these standalone batteries. So they are an essential part of the grid, and you can see that the addition of standalone batteries in WA, it has helped flatten the solar duck curve. So the solar duck curve is a phenomenon which is caused by household PV, and you've seen negative price energy in Western Australia. It's decreased from around 20% of the time down to less than 5% of the time. You compare that to the East Coast at the moment. Queensland is still in excess of 20% of the time, negative prices. New South Wales is similar sort of numbers as well. So batteries have helped stabilize the market because an issue with having not enough energy on the grid is sometimes having too much as well. It can trip the grid. So batteries have helped flatten the curve. But what we've actually found is the flatten the curve, however, the water below the duct continues to rise. And that's why we're finding that energy prices increase further. Now, as mentioned, we're going through an energy transition as we target 82% renewable energy generation across the country. WA today is sitting at around 38 to 40% overall, but coal in WA is really the key talking point. The reason why coal is a big talking point in WA compared to the East Coast, I think you'll find the East Coast coal will stay on, or it could stay on for a lot longer past the forecast closure dates. WA is very different and it is unique. Coal is probably the one commodity we are short of. And the coal operations in WA, they are running very low. So Griffin coal operation, that's increased from a 5-to-1 strip ratio up to a 20-to-1 strip ratio. And that's been effectively in administration for the last 20 years. Now, the state government has made public on numerous occasions, they are targeting to be the first state within Australia to close all coal operations on the way through. So, but the Collie and Merger power stations, they've already been earmarked for closure. So Collie will close in 27 and Merger in 2029. They're both owned by the state government and they will close on time. Blue Waters, that's owned by a private group, Sumitomo. That has been the benefactor of subsidisation of the West Australian government through the coal mining operations, the tune of around $100 million a year. That's closing. That subsidisation's finishing by June of next year. So it remains to see how that operation will go long into the future. But when you look at the closure of those assets, as well as one gas generation facility, you're looking at around 6.7 terawatts of energy generation, which is going to be leaving the grid in the next number of years. Add on top of that, just a modest forecast and increase in demand of generation of around 4 terawatts of energy generation. Western Australia needs to find 10 terawatts of new generation within 4 years' time. Now, the West Australian grid today supplies 20 terawatts of generation, so you have to increase that generation by 50% within 4 years. If you look at what that really means in real terms, the largest wind farm in WA today is a place called Colga. We would need to build 17 of them within that 4 year time frame. Or alternatively, if you look at just our stage one project, it's the equivalent of building 44 of those projects within that 4 year time frame. And the reason why I say 4 years and not the 6 years out to 2031, everything in energy is always a 2 year look forward. So everything at the moment is looking forward at 2027. So you're starting to see there is a big energy gap, which needs to be closed really very quickly. Especially when you look at Western Australia in the last 4 years, there's only been one new renewable energy generation project added on the grid. That was the Cunnaden project, and it highlights these projects are difficult to get up and do take time. But the key difference for us to make sure that we can hit that in that time frame is one, we have a connection on one of the strongest part of the grids in Western Australia. That ETAC connection is completely done and locked away. And the other thing is revenue certainty. Without revenue certainty, you can't get debt financing away. By getting that in place a month ago, we're now in essence ready to go on this project as we look to finalise debt in the coming months from here.
Thank you. Next question. Do you have an estimate of what you think reserve capacity will be next year?
Yeah, listen, the benchmark reserve capacity price forecast, it's due imminently on the way through. What I can say is the technology they had last year was a 4 hour battery, and that resulted in the price being the $360,000, which we've locked away for 5 years now. So that's lock loaded, guaranteed on the way through with the 88 credits that we were given for that $32 million per annum. On saying that, it will be a 6 hour battery, is our understanding when they do the technology. And on my own personal opinion, you'll probably find that the benchmark price will now begin with a four, around that $400,000 to $420,000 mark in terms of my estimations. But I think you'll find that price will come out in the next month or so. It is imminently due on the way through. So it's important to ensure those benchmark prices continue to remain high to ensure that it continues to attract new energy generation and storage onto the Western Australian grid.
Thank you. Did the increase of battery size to 6 hours due to the increased minimum energy storage resource obligation duration impact the Waroona timeline or finances?
No, not really. Listen, so the changes were made earlier in the year. So they increased the duration of the S-rod, as referred to, from a 4 hour duration up to a 6 hour duration. If we had kept the battery duration at the original 4.75, we could have done so, but it would have meant then instead of receiving 100% of the capacity for the battery, we would have been discounted on the way through. So the company made a decision that we would increase the duration of the battery to at least 6 hours on the way through. It'll actually be a little bit longer than that as well, to ensure that we get 100% of the reserve capacity payments, which we've now completely locked in and locked away as well. In terms of the financing, no, it didn't actually change the financing at all, but it did actually make us consider our CIS application. Now, I've just got to be careful what we say through here. It's obviously been made public that we withdrew our CIS application on the way through. There was a number of reasons for that. I think ensuring that we got that the 5 year lock-in for reserve capacity, that was obviously front and center of it, which does give us that revenue certainty, which is required for debt financing. But the other one was the S-rod. So the S-rod that we had done submission for with CIS was looking at a 4 hour battery, but obviously that changed to 6 on the way through. So that was a key reason why we withdrew our CIS application. But importantly, after speaking at length with the federal government, we were allowed to resubmit both for stage one with the CIS application as well as stage two as well. So those submissions have been done. That was done at the beginning of November, and we'll find out the results of that in March, April of next year.
Thank you. Just further to what you were talking about there, did the withdrawal of the CIS tender to impact? Was there any impact in relation to the finances or business relationships?
No, listen, we're the federal government. We're really supportive of the strategy they've got for CIS, and I think it is a great strategy overall as well. We continue to communicate with them all the way through. But it just felt like it was right for us to not continue on with that contract at that point in time. But they were very supportive for us to resubmit in the future as well. Now, there's no guarantee that we obviously get CIS again for stage one or a stage two, but dealing with the federal government through this whole process was a very good process. And we're understanding of what their requirements are on the way through as well. So yeah, I'll reiterate the federal government with the strategy they got to ensure that projects can get up by providing that revenue certainty. It is a really good strategy on the way through, and I do believe that with a little bit of luck, we're successful in the next round on the way through for that as well.
Thank you. Is the project still on schedule as per the project schedule within the latest DFS?
Yeah, so at the moment we're still on schedule. So we're targeting October 2027. That remains in place at the moment. Obviously, the key thing that we're working through now, which is already well underway, but we'll look to finalise throughout the first quarter of this year, is obviously getting that debt finance in place for the project to ensure we can meet those time requirements. At the moment, there's nothing massively on the critical path timeframe. Um, as we work through, but it is important that we get that debt financing finalised to ensure then we can fill that the gap on the way through as well.
Thank you. And what are the company's priorities in 2026?
Obviously, front and center is finalising the financing for the project. Listen, that stage one project at the moment is, as we've obviously already mentioned a number of times, it's essentially ready to go. We have all connections in place, permits, approvals, environmentals. Everything for stage one is locked and loaded. It is all about now finalising the financing strategy for the project and getting that locked away to ensure we can start building in earnest as quickly as we can. At the same time as that, however, we do have eyeballs on a stage two as well. There'll be more information which comes out regarding a stage two throughout the first half of next year. And we are targeting for that stage two project to get that revenue certainly locked away, hopefully throughout the course of the first half of next year as well. So there's a lot of work which is going on behind the scenes to get that stage one and stage two project ready to go, which we'll obviously be looking to finalise throughout the course of this year.
Thank you. There are no further questions at this time, so I'll hand back to Adam for closing remarks.
Listen, thanks very much again, Nathan, for the time today, and thanks everyone for tuning in. Again, I'd like to thank all existing shareholders for their continued support throughout the course of 2025. As we look now, we'll complete this capital raising now, the $10 million. It's effectively all there. It's been very well supported by a number of existing shareholders. Once we get the cash in place for this, we'll be looking to obviously finalise that debt financing facility throughout the first half of next year and look to really get this project underway. This project is important not only for Frontier and our shareholders, but obviously for Western Australia as well. Western Australia needs more energy on the grid as quickly as possible, and we believe we can be centre as part of that strategy, not just for stage one, but for future expansion stages as well. As usual, always happy to take calls offline with any investors to talk through any questions they may have. But thanks very much again.